Good morning, everyone. Microphone check, screen check. It might sound a little bit different. I've got a slightly different layout. We're trying to move some stuff around to make life a little bit easier. But the sound maybe just a little bit different. But it looks like it's working, so that part's good. All right. Welcome. Mic check. Looks like everything's working correctly here. Oh, fantastic. I hope you all had a fantastic weekend and you're all rested up and ready to go for the week ahead. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. It's very important to understand everything that is inside there. And then just a quick note for you all before we jump on in today, if you're watching on the YouTube side of things, the stream there does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Hey, Steven. Yeah, 2,000 subs. We made it. I didn't even get a chance to do the 1975 giveaway video, and I got to do the 2,000 video, too. Man, everything just kind of, well, if you were looking at the comments and stuff that we were posting, you know what's going on. But, yeah, it's fantastic. We finally broke the 2,000 subscriber mark. It's absolutely incredible. I'm behind on videos, that's for sure. I'll get them out. I will. I promise. Good morning. Welcome. I just want to take a second, like we do every day, to thank all of our new members, speaking of which. All of the new subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. One of the easiest ways right there on YouTube to check out the join button below the stream. That gets you access to the extended hours room, which is where we continue the morning room with a little bit less delay to the end of the session. YouTube members also have access to the communities area where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to the Discord chat server. Plus, the cool thing is you get the awesome badge next to your name on YouTube to show your support. It just looks really cool. If you want to take a massive step further forward in understanding our trading approach and what it is that we're doing every day, look no further than the Day Trading Academy. This is where you can learn how we do everything, but listen, this isn't a small little PDF guide that you're going to finish in an afternoon, all right? Yes, there is a quick start course, but to really dig in and kind of get to the meat and potatoes like the Academy does, you're looking at about 19 plus hours of video course material. Alongside that, with the course, there's homework and study guides along the way to really make sure that you understand what's going on while you navigate the course, which I review personally. And you get the DTA upgrade discount, which is awesome as well when you're ready to go up to the final step, which is VIP. And that's going to be the top floor of the executive suite. VIPs have permanent access to everything that is SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, and everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire session, meaning that they are on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at what's going on today, take a look at some news, take a look at some charts, all that fun stuff, and see what's all happening so far. Don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. Nasdaq, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. As far as the news is concerned, we don't have anything going on. Hey, Bram, how's it going? There's not... I mean, the news calendar is pretty light, all things can... I mean, the only thing that was really on there was the investing.com news and then TickNet long-term transactions. It's just a bunch of stuff that doesn't really matter. Well, not that it doesn't matter. It's just, it's very unlikely to have any impact. So as far as the news calendar is concerned, there's basically nothing. Pretty straightforward there. So let's dive in. Not into the Nasdaq yet. Come on now. Let's start off on the S&P and see what's going on over here. As far as the S&P is concerned, I mean, the big thing that we've got going on with the S&P that has been going on for quite a while is the fact that the market kind of had this quick little trap underneath the low, rotated all the way up to the highs, and kind of left behind all of those potential traders who were stuck from before. They could be traders who are stuck trying to go, short from up here. It could be longs that are taking profit. It could be new longs that are buying in. But whatever reason, I mean, realistically, we've got 44.25 quarter is the big POC where all of that transaction took place. And noting that, given that when the market did break above it, it started using it as support, broke higher. Now every time they even came close to it, it was being used as support. If the market does return down to there, it's very likely that 44 quarter, sure, is going to be the zone of support where a lot of traders are going to be looking to kind of re-up for the long side and defend. The problem is, if they lose their grip here, there's a little bit down in the 44.12s, and then there's not really much until 4,400. And if that doesn't work, then there's not really anything until the bottom. So it's pretty wide open from there. 10 days before the red badge. Yep, you're getting there, right around the corner. So as far as the S&P is concerned, I mean, I want to be a bull, but I want to be a bull on maybe more of a pullback. Just not that far up. Over on gold, after the dumpster fire that happened over on the weekend, they recouped, right? I mean, this is what we were talking about was likely going to happen anyway. Anytime you have that giant slide to the downside, you're usually going to see the market, if they're not going to follow through, which they obviously weren't, then you're usually going to see that rotation back to the upside, and that's what we're getting right now. They haven't fully completed this move, though. That would take place at around 1805, just eyeballing it. So that would be the zone of interest where bulls really need to kind of get to prove that this would be a V bottom. I don't even really want to call it a V bottom. It's not really much of a V anymore, but we'll see. Maybe it ends up being an N. Get that out of the way. All right, over on crude oil. Crude oil is cycling to the downside once again and rotating its way lower. The big consideration that we have to have here is going from the top to the bottom. Where was the impulse POC? Where did the market respond to this? Doesn't help that my data's all messed up. Let me go a little further forward. There we go. The impulse POC, give or take a little bit, was right around here. We can see there was some resistance there, so I would assume it's there. When the market broke above it, the bulls tried getting it going, but the one important thing that bulls need is a new high. They couldn't get the job done, and after that it was lower high, and now we're rotating back down. Make a lot of sense that we try to gun through the lows. Let's wind this a little further forward, though. Likely a POC shift, right? Yep, 69.10. And that really explains this extra little pushback here. The market had that. I mean, we already kind of talked about what happened. The buyers were trying to get that rotation up to a new high. It failed, made another lower high. They were getting out at break even. That's why that lower high happened, and everybody else jumped ship. I just don't see that a whole lot of support is going to be holding this market up. Maybe right where it is right this second, but yeah, there's not much until down in like the 65 80s. Over on the euro, nice big strong rotation off the lows. Pulling this from the top to the bottom, we can see what's going on. We had that big old POC transition, and they were not shy about that volume. Remember, the POC was up here for ages, and then it finally rotated down, and then they had another one that popped up. So we've got two POCs. It took them forever to get that thing to shift. And then when they finally did, now we've got two of them. Either way, the market is above it, and we have a very strong rip to the upside. Likely sellers are stuck. This pullback is nothing more than sellers getting out of break even, and we know where that is, 17,680. So far, it hasn't hit it. If they start seeing some more failures from the sellers, this could be a squeeze all the way back up to not only the previous POC, but because they shifted it to the downside, remember, we can measure this now. Their 2-to-1 targets are going to be close back up to the highs. Around 1.19, eyeballing it. On Bitcoin, more continuation of the upside. Bitcoin looks very similar to the Nasdaq. It's kind of funny. The way that it's forming, at least. We've got this really consistent kind of upward momentum. And one of the things that stands out very obviously, spike and channel, right? But along with a spike and channel, one of my favorite things, we've got those confirmed swings. Follow it from the low. Confirmed swing. Confirmed swing. Got a little baby one right there. Another one right there. Another one right there. And have they made a new high yet? I don't think they've made a new high yet, so this is not a confirmed swing. So as far as trap locations go, this is a fantastic spot for longs because they have the opportunity to get in with a very small risk. That would be underneath the previous. But a reward all the way back up to the highs. They're like a 3-to-1. Very, very nice zone of interest for the dip on the longs for Bitcoin. And then Ethereum, where that also has a almost identical pattern to the upside. We've got more continuation higher, working their way up, ascending wedge style. Again, previous pullback would be very, very nice here to get a little trap underneath these lows. All right. Let's switch over to the Nasdaq as far as the daily is concerned. As expected, after we had that Jumbotron bear bar right there, the market's been going nowhere, and we've been struggling over the top of that bear bar at the moment. But as per historical usual, it's still grinding up. So likely we break above this within the next couple of days, but it wouldn't be a surprise to see a little bit of a dip. A lot of times that we have, well, historically at least, whenever we have this big bear bar in the way that it's going and it stays inside of it, it just keeps grinding its way up to new highs. And then within about a month, there's usually a larger correction. Just throwing that out there. But as it stands, we'll probably end August pretty well. September might be a little bit tricky, though. We're completing some major objectives up here, and we can definitively see that the market's starting to stall out. If we go from the bottom all the way to where we are now, and grab this before it starts trying to load that. Apparently that didn't really matter. Okay, really? Okay, let me try again. The heck is going on in my order flow on my daily? There we go. Jeez. All right. Bump it out that way. Now it's loading like there's no problems whatsoever. What a... Okay. So again, remember how this all set up, because this adds a lot to the context. We rotated up to the highs. All of the buyers on the face of the planet who bought that dip underneath the lows, which we were talking about aggressively for quite a while, they got their targets filled. We pulled back again. After we saw that top-weighted POC, this is where we've got to see, okay, well, wait a minute. Are these longs exiting, or are these shorts coming in? Because really, if these are the longs, then why is there double the volume? Right? It can't just be these longs exiting. So there's got to be something else. And, well, we know what that was. Shorts trying to get that secondary leg to the downside. Now, if we rotate this back a little bit further forward, we can see how they kind of played it out. We've got that POC up at the top. They're getting closer. They're getting closer. Got the POC, they're getting closer, and then they shifted it right. Oop, let me go back. They shifted it right there. So you see what kind of took place in this context? If these were shorts trying to get the drive to the downside, realistically, their risk was almost nothing. So from a reward perspective, this thing had to have gone like 4 or 5 to 1. Incredible reward to risk for the short side. Now, after the market dove all the way to the downside, all of the moving average clusters are still staying to the upside. The overall trend is still up. We have the sellers who tried to get 2 legs to the downside measured out perfectly. Higher low, another higher low with a bull bar closing back above the POC, and then the POC shifts down, further confirming that the market closed above the POC. There's a lot of problems. And if we go back a little bit, that was the alligator's mouth snapping shut. That was one of the best trades of the year that you could have asked for, right there. Now, after that's taken place, we've reached up and we've met some of those major objectives. You remember the double up volume target? We've still got it plotted there. It's around the 14,990s. We're also projecting targets up in the 250s. It hasn't quite made it all the way up there, but it keeps taking out all the targets. Now, if we roll this a little bit further forward and kind of see the context of what's going on here, a little bit further, the POC hasn't changed. Now remember, the context here is that the assumption is any sellers who were still short are liquidating the rest of their position and reversing for longs. Okay, that's the assumption here. So when the market is continuing back up, we have another bull bar back to the upside, and the POC shifts up where? Right at the base of all those wicks with the bull bars closing back up. Now, obviously, buying at the top is incredibly difficult, and a lot of buyers didn't want to, obviously. But after we got that pullback, let's see how they wanted to kind of flux this inside there. Well, I guess it doesn't really matter. They didn't change it since then. That's been the last point that we've left behind. Now, we can see there is some very large volume building up here in the 100s. Definitely standout volume, and it's building up to it. That's the concern. If they shift the POC to the upside, the market may have enough potential to try to churn back on itself and grab this 13,904.75 or close down there to try to backfill some of that previous zone of interest. Well, right now we're at 15,100. So, you know, just a little ways down there, just a little bit of a chunk. If we look at where we are currently, back to roundabouts where that is, about 7.6%, which historically fits perfectly. The historical pullbacks around now have been 8%. Just throwing that out there. I don't believe in coincidences. Say it with me. I don't believe in coincidences. If we look at the 15-minute chart and see what's going on here, got a little bit of our work from last week, but I mean, it all still kind of holds true. Realistically, a lot of the longs were trying to re-up into the long. It's the same story that we were just looking at on the daily chart. They're trying to re-up on the long. Rolled back down. They tried to get it again. Lower high. They failed down. Looks like they were going to give up the ghost. But remember, we were looking at buying that dip down there. It's just never made it down that far. And then reversed out of the gates from there. With that higher low, now we have the POC that they're butting heads up against. Let's see if that's changed. Let's drag this a little further forward. Okay, so the POC is still at 15,115, which is still suggesting that the bulls don't really have the grip yet. It's hard to say that. I mean, let's be real here. But, you know, as long as we are below that POC, they're going to have a hard time. Now, looking at it from a cyclical perspective, the last time we had the last pullback from structure, we had an L5. That L5 rolled down into an L4. That's not very typical. The L4 rolled down into another L4. That rolled down into an L1. So at least that stuck. And then when that broke down to another new low, now we're back to an L4, actually L5 again. So, I mean, we're not really getting a whole lot done from the trend perspective here. They're still sort of in correction phasing. But, again, remember, the last corrective 5-wave phase was to the lows that completed down here. This might be the cycle up in a larger perspective, wave 1, wave 2, trying to get 3, 4, 5 all the way up. It's still just super early. Still seems like we're in the middle of a range and we're still kind of going sideways and correcting. Major zones of interest today, given the 5-wave cycle and the completion. Still interested down here if it does make it. I mean, aside from that, the only other thing would be a triple down, which we kind of already have. So, I mean, maybe a higher low quad down. Sheesh. A couple zones of interest. She's knocking everything over. Hang on. Kicking my fan, throwing my phone off my desk. Good Lord. Okay. So the zone of resistance, honestly, I mean, that's already kind of held. It's still holding. If anything, it's just gotten a little bit further up. For the bulls, we've got an L1 so far, another L1, another L1, and now we're finally getting the L2 pullback. So, I mean, if the bulls are going to come in, this would be the spot. This over here. All right. And now we're ready to rock and roll. We've got about 6.5 minutes until the open, right around the corner. As far as the market so far, is concerned, we've got a... I mean, I guess if we start with Sunday, it kind of started over here. A little awkward from Friday, but we start with a cycle to the downside, kicked off of an L4, but couldn't break a new low, and had equal low closes, came back up, tried hitting an L5, but missed it, came off of the L4, and finally broke to a new low. After the L4 rotated down, usually an L4 is going to see sellers off of the L1, which they tried. Couldn't quite get the job done, though. And with that failure, they rotated all the way back up, finally grabbed the L5. Now, remember, when they have that strong of a rotation, a lot of these sellers are going to think, oh, crap. Like, whoops, get me out of this thing. So when it comes back, a lot of traders are going to be looking to buy that, and they did. They bought it for a quick little bounce, but it broke back down and showed them, oh, I should have actually stayed short, huh? And they re-enter in the same spot again. So there's 3 different entry points that all took place in the same location. You got the shorts, which tried, failed. Tried for a long, reversing back to the upside, broke back down, re-entry back to the downside again. Just a 1, 2, 3 punch. Now, after the L5, typically an L5 off of the top should see an L2. So if we go down here, where did it come back to? It came back to an L3. Well, wait a minute, that's a problem. We should have seen an L2. Because we did not, the next time we come down here, the anticipation is that they're going to have a harder time. And they are. They haven't made a new low yet, all things considered. So they're still likely to get that new low. It's just, ugh. From a cycle standpoint, we've got wave 1, wave 2, wave 3, wave 4, and wave 4 is starting to get really far out here. They're going to have to finish this thing off pretty soon to kind of get the job done here. And this might just be good enough. I mean, really, it's a 0.61, basically. With a higher low and a gigantic middle leg that kind of overshot the lows, it would make sense. Not from an Elliott wave perspective, but just from a structural perspective. Then likely the Elliott wave is coming from over here and starting off at the top. Even then, wave 1, wave 2. I mean, it's not a valid impulse leg, but they don't have to make a new low. We're still in that corrective phase. We're starting to wedge. Well, we don't have the top of the wedge yet. But. Here we go. 3.5 minutes until the open. Looking all right. As far as this quick new high that started off here, I guess if we can work off of any definitive starting point, we've got an L4, which broke down into an L1 that did actually hold, and then an L2, and then an L3. L1, L2, L3. Okay. So the concern is exactly what we saw earlier, just in a slightly spread out picture. We've got a very strong move down, and sellers will be looking to try to maintain this L1, but they failed. And with that perpetual failure to get going, if this starts churning back to the upside, those shorts are going to look to jump ship. And that would probably be the final higher low before a reversal back up. Kind of a midpoint. I wish it looked a little bit nicer, but the only thing that the only reason I really like this structure, right? If we go really far back and let me narrow these in just so we can see them. We've got the L1 right there. Got the next L1 right here. We've got the next L1. That's not what I wanted. Right here. So hopefully for you Academy students and members, you know exactly why I love this area so very much. Right out of the textbooks. Hey, how's it going, Ace? Welcome, welcome. Hopefully everyone has a great day. I agree. Kick it. We got 928 has hit, not really causing a whole lot of volatility here. Yikes. One minute. Still going a bit sideways, choppy, sloppy, wedge-ish. And now, maybe confirming a top of a wedge. Still super, super early. Steven, for every month that you are a member on YouTube, your badge color next to your name changes. So his next badge on his next month that he stays a consistent member gets a red badge. It's a different way to show like full how long someone's been subscribed as a joined member on YouTube. So you'll notice if you look next to his name, he's got that darker greenish badge. That's what he's talking about. All right, markets open. As far as the S&P is concerned, we are opening with an outside gap down. Outside gap down on Friday's sideways blech. There's not really a whole lot going on. I mean, look at this thing. This thing's a freaking train wreck on Friday. So as far as the overall movement goes, bulls try to get a rotation to the upside, and now they're opening with a giant gap down. Yikes. That's not going to sit very well. Initial thought is bearish. Yeah, I'm going to have to start adding more colors. Or different designs, like once you get past that last one. I've got Photoshop. I don't know how the hell to use it, but I've got it. I'm sure I can design a little sprite or something. More continuation to the upside. Bulls so far seem like they're kind of BTFDing a little bit here, but we know why. On the Nasdaq, we're in the L2. Right in that zone of interest. Although it started off at 67.50. It's a little further down here. 67.50 is right here. And if you want to know why these levels are so ludicrous, look at that pullback. Oof! Nice reversal off of the sell side. Shorts are definitively stuck, and we already know their POC's kind of hovering back a little bit. That's back at 15,088. As far as the bulls perspective from the top down, the impulse POC is all the way up here at 110. So if the market's looking for an objective to the upside, 110 would be a likely place that it's trying to run to. Yeah, we've got a little time, but you know. I'd like to have a cool, I don't even know, a crown or something, you know? Shorts are very obviously stuck on the wrong side of things at the moment, and they are very likely hoping to just escape at any way possible. A lot of volume building up here. They might not be able to. As far as shorts to the downside from a risk-reward perspective, it's kind of difficult to not like the short off of that POC at 110. The initial risk is up above the highs at 1975, but the potential for... It's not quite a 3 to 1. It's about a 2.5 to 1. 2.3 to 1. 2.2 to 1. There we go. Starting to dip back to this POC area, looking at this zone for earlier shorts to potentially realize that, wait a minute, this is our chance to actually get out at break even. And I want to see them utilize that chance for a continuation. All right, nice little scalp target taken out. For that little bounce. Unfortunately for me, I mean, I wasn't able to grab the swing from the larger perspective, but if they offer up a reasonable ability to. More continuation to the upside. Bulls find a nice zone of support. And those earlier traders who realized that they were getting out at break even, I think are going to use this dip to re-up for another jump. Let's get that continuation back to the upside. Beautiful jump back up. Yep, fantastic. I didn't even have a chance to adjust the risk-reward tool for a scalp. I only had a chance to get one, which means that it's probably never coming back. Wow, that first bear bar on the S&P. Yikes. Okay. Lordy. What's the POC looking like here? 44.50. Oofta. All right. From the 5-minute on the Nasdaq, hopefully it hasn't changed yet. It may have changed. Let me go back just to double check. It has not. 98.75. I don't care about the freaking color. Make it all charts. Thank you. All right. Nice little final dip there. Man, that happened fast. That was more likely an algo dip, unless you were real fast to grab it. That quick little snap down. Jeez. Okay. Well, there was another chance to re-up for a scalp, but it was there and gone in a millisecond. They're pulling back again. Like, what? Why is it taking so long? That makes me a bit nervous. Ooh. That's a really nice bull bar, but it's directly into the 5-minute. I'm going to see if I can grab a dip down here. I didn't get a fill. Fantastic. I tried buying below that previous bull bar, but I couldn't get a fill. Well, the anticipation would be for that bear bar to have gone bullish and trigger above the bull bar. The fact that it didn't, I would be looking to exit anyway. Just small scalp, not worth it. I guess it's lucky I didn't get a fill this time. Maybe. The market's having a heck of a time getting anything going. $91 is where that would put it. So we did break out of the wedge. The bulls are trying to get this to climb back up. We've got the L2. They're trying to get that continuation. The larger perspective. They got it to 7 quarters so far. POC shifting down in the S&P, 44.4275. L2 continuing to the upside. POC on the Nasdaq still at 98.75, no change. They made it up to 108. Man, they're really trying to reach out and grab that 110. They're so close, too. $9.75. Okay. Really? They're gonna Walmart special this thing, huh? $99.99. Okay. Fair enough. I mean, not really, but... Looking at it from the bulls' perspective, now that we have broken a new swing high, we've got the L5 reversal off of the lows. L5s typically procure L2s. It did. The L2 dip, nice continuation back up. We got the L2 followed up with another L2, actually. So the third L2 in the sequence is just a little bit further down. And we're above the POC, which is shifting. A lot of things are helping out here. There we go. 12 quarter finally got the job done. We're coming back to the POC. POC jumping around a little bit around the hundreds. Traders kind of hovering around this area. Shorts are still stuck, but remember, their ultimate stops, the full break point of the short happens above 1950. So complete invalidation, total failure. That hasn't happened yet. So the shorts still technically have a shot. I think it makes more sense to the upside. The third L2 in the sequence would be down at 96.75. Coming back and tapping the 100s. A lot of times the way this is forming, it would make more sense to see an attempted dive down into the lower 90s. They don't have to, but... See that little trap that happened right there? That little dip down? I thought it was going to go a little further than 98, but that little dip is what I'm talking about. Okay, well, it might not be done yet. $98.75. Okay, sellers are starting to get that little attempt going on here. Now, as this starts dipping down to this previous swing low, that's where things get really interesting. It hasn't quite made it that far, though. They actually get... They got one tick underneath it. Man, that happened fast. Jeez. Nice reattempt at the 98.75s. Very heavy bear bar. That follow through is pretty trash, though. They're gonna have to show up to the party a bit better than that. Got a nice dive down underneath 98.75. Market continuing to push to the downside. Major zone of interest is going to be under the 82.75s. Nice two-legged correction phase to the downside. We've overextended it a little bit. Okay, now that bull bar has got my attention. I'm willing to give it the risk of one candle, given the way that this is forming. I really, really like this for a potential reversal off of the lows, if they're going to reverse it. That's the kind of candle that starts the fire. They couldn't get that reversal going, so I'm going to reduce risk a little bit here. Let's see if we can grab an actual risk 3-to-1. Alright, I'm going to drop it there. I did not do it the way that I wanted it to, and it invalidated the trade by going down to another new low. I tried getting that V-bottom bounce, but if it's not going to bounce, it's not worth it. You're just better off taking the loss. More continuation to the downside. Now, sellers are really starting to break away here. We've got a really good drive. We've got the first drive down, wave 1, wave 2. I still think this is all part of wave 3, but... here we sit, market continuing to the downside. Now the S&P is underneath the 5-minute POC, which is no longer 5 minutes, but still getting there. This is also a retest of the L2. So for a swing perspective, the swings are 100% long from this area. Okay, it's a major pullback zone, 67.75. This is the area where bulls are going to be trying to get that rotation back to the upside. But their break point is going to be back down through these lows. Realistically, not really going to want to see the 52s broken by much. It should have gone by now. If we're looking at it from an actual risk perspective, a lot of traders have already achieved a lot more than a 3-to-1 actual risk. And even based on the smallest of areas, it's already kind of gotten it. So, it's a big zone. But I'm not too surprised if this fails, because the bounce has already been successful. Like, the bulls already had their long, they already had their targets, it already worked. They defended those 110s all the way down. Incredibly low probability, but the reward versus risk. Like we were saying, the sellers haven't lost their grip yet, technically. Boop, boop, boo, doo. There they go, all the way down to the lows. Now we have a completion of the fifth wave. Remember we were talking about how, like, not so sure, like, where are we in this sequence? Do we have, like, wave 1, wave 2, wave 3, 4, 5, or is it you know, something a little smaller in here, or what's going? Now we have proof. Right, it's still a corrective phase, but wave 1, wave 2 finally broke down to a new low. Wave 3, wave 4, wave 5. Now we have to qualify it, make sure that it fits. So if we go from the top down to the bottom, up to the top down to the lows, that is longer. Goes up to 0.75, and now we're back down to the lows. It fits. It's a corrective 5-wave structure. If we can get a perfect test, the fib number's down here at 0.38. That'd be at 15.041. Technically, if we were doing perfect fibs, this would have been a 6.1, which is interesting because you can see where the 6.1 came in. Oh, you gotta love that. Nice little pullback down. So again, I know this trade, this L2 bounce looks like a failure, but it wasn't. This was a perfect bounce for a 3-to-1 all the way up. They didn't have to make a new high. Straight out of the textbooks. Fantastic. Now we're diving, which makes sense because we have a completion of a full cycle. We've got an L1, L1, L1 into a deeper L2. It got its 3-to-1 target, didn't even have to break a new high, and now we're rotating back down again. This could all, if we wind this back a little bit, just be part of the larger cycle. A 1-to-1 move down. Look at where a 1-to-1 move puts it. I mean, we've got the measured move down. We've got everything lining up. If we did like a fib number, 1.2, let's do 1.21. That's a pretty common one. That puts it basically at a double bottom. So that reworks this whole area. In the ES, if the sellers are selling the POC with a 2-to-1, does it make sense? Generally speaking, if you're selling a 2-to-1, if you're selling for a 2-to-1, you're already taking the assumption that you're not going to be right more than 50% of the time. It's an impossibility, right? Based on how probabilities work. So going for 2-to-1, let's say that your baseline is 33%, right? If 2 plus 1, 3, we just chop it down, we'll say it's 33%. Well, at 33%, then realistically, you'd be at roughly break even and a loss factoring commissions. So our job is to find a location that has at least a 35% likelihood of success and then add a couple more percent to it with other factors. Trendline low, wedge, L1, L2, you know, whatever. But the mindset when you're taking a 2-to-1 is that you're going to be wrong more often than you're right. And that's okay because the winners compensate for it. You're going to be wrong much more frequently, in fact. you've got to be okay with that. It's just that the losses are, really, really tiny, whereas the wins can be 2 to 1, but some of them go 3, 4, 5. I mean, look at this one, is just as an example. Now, it doesn't mean that they won't take targets at a 2 to 1. It would be stupid not to. But like here, let's rotate this up to the highs and assume that they put their stop up at the top. You've got their, not 23 to 1, they're 2 to 1. And you can see, they took profit at 2 to 1 because it would be stupid not to. Right? So, I mean, we know that they took 2 to 1. It's blatantly obvious. But if we cycle it a little bit further, how far is this actually gone? Right? Like, what, 6 to 1? 6 to 1 was down to the lows. 8 to 1 now? 9 to 1? They've gone 9 to 1 so far. So, I mean, you tell me. If that trade is right 27% of the time, but it goes 5 to 1, or 9 to 1, what's the trader's math look like, Let's see here. 27% of the time, minus 100, because God forbid I got to do that math by myself. 27 times a winner of 500 versus the 73 losses of 100. I mean, look at the difference in math. The differential is insane. Who cares if you're right a quarter of the time? Does it matter? You just need a couple things in your favor. That's it. The hard part is the psychological backdraw of being wrong so many times. Like, you're literally waking up every day, coming into the ring just to get punched in the face 7 times, But that one time, or those 2 times out of those 7, it's going to make up for it, and, it works out in the long run. You've just got to understand that it's long-term probabilities. One day doesn't dictate anything. It's a different psychological approach when you're trading it that way, but trading a 2 to 1 off of that, definitely. That's why we were talking about it. This zone is where sellers still have a reason to believe it, and as long as it doesn't break above the highs, that's valid. It's a tough pill to swallow, but when you do, it works out pretty well. 1.77 now. Going into 10 o'clock, right around the corner here, market's still just kind of hovering, not really a whole lot going on. Very nice bear drive to the downside. Realistically, with this type of cycling, at least, off of that previous swing high, this is an L5. So an L5 should see an L2. If we look at this from the bigger perspective, this all makes sense because we are now breaking through all of that support. The last one is right where we are now. Kind of the bottom of the spike and channel, spike and megaphone, if you will. Just need to make sure you don't keep losing until it blows the account up before the profit then. Yeah, exactly. And that goes down to how much you're risking on the account, right? Depending on the account size, you might not have a choice to risk more, right? I mean, if you're trading like a $500 account, you're still going to have to trade a little bit of a higher percentage. But as long as you're, risking, I don't like risking more than 1%, but I know that's a tough reach for a lot of traders. So even risking like 2%, 3%, I like risking half of 1% if possible. But I mean, if you look at the micro Nasdaq, let's take the micro Nasdaq as an example. $500 account times 0.01. I know it's easy math, but it's $5. Well, divided by 50 cents is 10 ticks. So I know that a 5% risk in this case, if I'm using a 1% risk on a $500 account, is probably not going to work. A 10 tick stop, I'm not going to find many of those. So your account size will play a part in that equation. But generally speaking, I don't like risking more than 5% at the very least. Or at the very most, rather. And, obviously that puts you closer to 25%. Or $25, rather. So $25 times 0.5 is $25, but divided by 0.5 is 50 ticks. Now we're talking. That's a little bit easier to find. Let's take right now as an example. If I wanted to take the full dive to the downside and we've got the flip off of the L5 and I want to take the L2 to the downside next. Well, if I look at this structurally, I've got my entry here and my risk would be here. If you take this, because this is the full mini, I know it's a weird sentence, but if we chop this down to the micro, this is $16.50. Just move this over. Well, I know that fits well underneath my 5%. And in fact, that's underneath about 2.5%. That's a really nice risk. So for this trade setup on a micro account with a $500 account, in this case, it'd be about a 2.5% risk to take this 3-to-1 short. The likelihood of success is about 28%, 29%. But remember, at 29% times 300 minus the other losses times 100. That math was totally messed up. 8,700 minus 7,100, whatever. You know how that was supposed to go. The math is still very favorable. It doesn't matter. It's fine. And that's the idea. So you risk $16.50 to make $49.50. So as long as you can take a $16 loss, you'd be all right. And chances are you might take like 5 or 6 of those back to back. If you had like the worst odds, like let's say 10, right? You took 10 of those losses back to back to back, you're down $160, which is incredibly unlikely, but it still could happen. Welcome to probabilities. Right? How many reds or blacks in a row on the roulette table? I forgot, like 32 or 38 or something like that was the record. We'll do final call for questions and we'll transition over to the extended session here. Let's see if Google knows. Hey, Google. What's the world record for consecutive roulette spins?
I'm not sure, but I found some information for most consecutive roulette spins. Do you want to hear it?
Yes.
On the website roulettephysics.com, they say the answer is 32. In 1943, a streak of
32. Hey, Google, stop. Could you imagine 32 times in a row? Now, remember the probabilities of that, right? It's 1 out of 30, well, half the wheel plus 2 greens, right? So it's like a 50-50 odd 32 times in a row. 50% of 50% of that. You know, I mean, the odds of that are bonkers, but it can still happen. How did I do? Everyone's Googles at home are freaking out now. Sorry. Order my Amazon cart. No! All right, well, that's going to do it for this morning session. If I missed any questions, I think I got them all, but feel free to shoot those to me via email or drop them in the comments below on the YouTube side. As per the usual, we will be switching over to the extended session for VIPs and members now. So, again, if I miss any questions, you can always shoot those to me via email or in the comments below. I hope you had a fantastic day of trading, and we will see you all tomorrow morning. And don't forget as well, this week is going to be a total mess. If you've been following along in Discord and all that, there's been a lot going on. I don't want to go back into it all again, but this Wednesday is going to be totally off. There won't be a room this Wednesday. We're going to be gone. And basically all afternoon, on every afternoon, I'm going to be gone as well. But next week, Wednesday, my son goes to school. That's his first day of school. I think it's Wednesday. And then Thursday is my daughter's, or it's one way or the other. So by the end of like next week, we should be right back onto a relatively normal schedule again. Thank you. Oh, anyway, that's going to do it. Hopefully you had a great day of trading, and we will see you all tomorrow morning. For the rest of you, hang out for just a second, and we'll switch over, right? Talk to y'all later. Thanks.